The first of the big central banks due to report and deliver the latest thinkings on interest rates. It's the European Central Bank. We've got the Bank of England and the Fed coming up in the wake of that in the following week, but this week very much around what the ECB is going to do. And it seems to be on a bit of a knife edge. Certainly if you read some of the columns, you're looking at economists suggesting there's no need or no prospect of moving on interest rates. But on the other hand, it certainly seems like the move up that we've seen over the last year, that biggest move up in interest rates that we've seen in history because of the concerns about inflation, might continue with another quarter point rate rise. Let's now catch up with Richard Snow from Daily FX, where we monitor what's going on the markets all the time for interest rates, and we look at trades around this. Before we take a look at a trade, what are your thoughts on the ECB and the likely outcome?
Well, I think that the risk of a 25 basis point hike has been fairly underappreciated by the market, it must be said. I think there's a lot of reason to be cautious at this juncture, but I also think if we look at inflation, we haven't really seen a continuation of that downward trend in inflation. We're actually seeing both core and headline sort of flatlining, and particularly when we consider the increase in commodity prices, particularly oil at the moment, that can start to filter in. So if we consider that inflation is appearing as if it's flattening out, they could potentially be looking at that 25 basis point hike, and time to do it, I would say, is now, considering there is some fundamental data trickling through that's not exactly encouraging. And I think if they wait, they could be in a position where it becomes increasingly more difficult to hike later on down the line.
One can't help but consider the prospect of some political lobbying coming through from the Germans, especially because the German economy is in such a dark corner compared to some of the other areas. But in fact, if you look at the GDP numbers, they're all pretty dire, to be honest with you. This is the euro dollar. I want to talk in some more detail about this in just a minute and how we trade this, but just gives you an idea. This is the euro down against that stronger dollar that we've seen recently. But in terms of the other factors that the ECB shouldn't really consider, and that is concerns about jobs and, of course, growth. And there is an argument, is there, not to raise rates purely on the growth side, but that's not the ECB's remit, is it?
Yeah, they really just got that singular focus on price stability. They really, that's what they are intended to do. They need to ensure that they meet that price mandate. And at the moment, there's still a lot of movement. We could potentially see at the end of the day, they don't want to be in a position where they are faced with questions, have we done enough to get inflation under control? And I just think the timing could be an issue here. If they are to hike, for me, I think they would have to do it now. There's, of course, a greater likelihood, according to market expectations, that they don't hike. And I think that factors in a little bit of a price risk. At the end of the day, we could be seeing some interesting movements later this week.
Okay, as traders, we always like to attach it to a trade. And as I showed this euro dollar chart a short while ago, let's bring this back up again. Currently trading at 107.29. Here we are now, just to give you some sort of context. We're just about to see the US markets get underway on Monday, just to give you some time context on this. So we're talking Thursday this week, so a few days to go before the announcement. Where would you be best positioned here?
Well, at the start of this week, the dollar's been a bit on the back foot. Definitely the trend is still to the downside, but I think if you're looking particularly at plays around that interest rate, we could see some sort of a move higher in the euro dollar. I think the 200 SMA is quite ambitious, that red line, but if we are to see a further counter trend pullback here, that would certainly open up the potential for that longer term bearish trend to play out. So in the end, looking at a longer term bearish euro dollar, but I think in the interim, we could be seeing a move higher from here.
Yeah, of course, there's two sides to this. As I said, we've got the Fed the following week. What about euro against sterling? Is there a trade to be had there?
Yeah, if you are looking at range-bound setups, I think a lot of FX pairs at the moment, there are these opportunities showing up. And if you are looking at some sort of price action, you're looking at levels of significance, horizontal levels, that is. Euro sterling is one of particular interest there. We're sort of mid-range between that very defined range that you've got out there with those horizontal lines. But at the moment, if you look at where we're headed slightly lower euro sterling. So in the event we get that surprise rate hike, we could see a reversal of that, perhaps a move towards that upper band.
Okay, Richard, thanks so much indeed. Doubtless we'll be back to you talking about the Bank of England and the Federal Reserve when it meets the following week. Richard, thanks indeed for joining us. Richard Snow from Daily FX. You can catch up more with Richard on the Daily FX website.